Hello everyone and welcome back to another video. Please consider subscribing if you have not already. The more I see that people subscribe, the more willing I am to make a video and go over these kinds of stock analysis so you can get a good idea of what is out there on the market and what the companies look like through fundamental analysis. Please consider subscribing. Thank you so much. I see it. I see them all. I see all of you subscribing. Thank you very much. Let's get right into the video, and this is a really good one. I'm actually surprised that I have not covered this one before, but this is Roku. And Roku is an amazing stock as far as like the soundness. Again, I didn't look into who the CFO is, but whoever they are, they do a great job of keeping on top of their income statement and their balance sheet and their cash flow. They do a very good job, and they're very well positioned to be successful in the future, and we'll get into that. So right off the bat, Roku, from an analyst perspective, based on 20 analysts, is a moderate buy. It has, 6 holds, 1 sell, which is kind of weird, and then 13 buys. For the most part, it's a buy. And they have an average price target of $480, which is a 50% upside from where it is today, March 24th, 2021, at $318. That's a pretty good upside if you ask me. Not too shabby. And the stock analysis on it is also a very strong 10. Again, we've rarely seen this. If you watch my other videos, casual plug right there, a 10 is incredible, and it's really hard to find something that comes in as a 10. So let's get right into the income statement. One of the first things we notice right away is their fiscal year ends on December 31st, 2020, and for the year of 2020, they had a really good 2020. Given the pandemic and a lot of people were home, this was a really good year. And look at that! In only 4 years, they've basically tripled their revenue. So this is only going to go up too. Roku has a plethora of products and TVs and smart gadgets, and they are just going to get higher and higher revenue, and their revenue growth is going to continue to be double digits over the next few quarters. It's actually amazing to see. And let's see, their net income is actually, negative, but it should be positive pretty soon. I'm just guessing on that because I think that they're going to have very positive quarters in the upcoming quarters. So let's stay tuned and see if that does change to be a positive. For the balance sheet, this is a fortress. This is a really strong balance sheet. So they've already doubled their cash position in over a year and almost 10x in 2 years. Good for them. Good for them for basically, growing that cash pile and using different tools to make sure that they have enough cash on hand. Their total current assets is for the most part about 1.7 billion, and their total current liabilities is about 500 million. That right off the bat, again, a little bit over 3 times the current assets versus the current liabilities. They're in a great position. And even total liabilities versus total assets, very good position. What we like to see right here, I don't really understand it, but I don't really understand why they have almost 90 million in long-term debt. I don't see why you wouldn't just get rid of that. What's the point? Don't really get that, but at the same time, it's good to see. It's a good low number. So let's go into the cash flow, the cash flow statement. Let's go down here. Again, their net income is actually a net loss, and it's getting smaller and smaller. They've done like not really many acquisitions. I would hope that they actually start to do that in the future, and I could definitely see them growing to be a much bigger company if they start buying smaller companies and different range of products that could, fit them well and mold into what they're trying to do. But I don't really understand, the small amount of acquisitions. I hope that they do use that to grow. And let's see. Long-term debt issuances. See here, they've been issuing long-term debt steadily, and they actually did repay about 75 million. They repaid more than what they actually issued, was what we want to see last year in 2020. And they also did issue equity, which is good. That's really how they grew their cash pile. That is actually how they grew their cash pile, because we can see 497. They issued equity, and their cash pile grew by literally about 400 or 500, about 500 million. So that's good to see. And again, long-term debt, we want to see that continuously going down, and just pay it off. At this point, issue more equity and just pay off the debt. I don't know. That's just what I would do. I don't really know what they're doing. If you know more about Roku, please let me know, and let me know, what you think. They are cash flow positive, so that is good. But yeah, let me know what you think. Let me know what you think about Roku, and let's get into a portfolio of it. So if you'd invested in Roku at its IPO in October 2017, $10,000. It's only almost about 3.5 years ago. As of today, your $10,000 would be about 76,000 in 3.5 years. That's a 90% CAGR, and that is just absolutely incredible. This is, again, I say that almost every video because I'm just absolutely shocked at how great of a company Roku is, and how much they've returned to shareholders. 90% compound annual growth over 3.5 years is, 90% returns, not bad. That's what we like. And annual returns, they've basically, year one, which was in 2018, that was a rough year. That was a rough year in the markets in general, and basically double, if not triple digits since then. So I don't know if we're going to see triple digits over the next few years, but definitely expect double-digit growth in the return. So with that, let me know what you think about Roku, and drop a comment, like this video, please do subscribe again, and I'll see you soon.